Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, nothing to complain about today, given the fact that we managed to, hold that 25,200 mark decisively, so to say, because we ended just around that, day's high. 25,266, that's the swing high for today, but we ended around 25,244. Tomorrow we have the monthly F&O expiry. If we expire above this 25,200 level decisively, experts say that 25,500 could be upcoming in the next few sessions. So yes, we have managed to clock that level pretty smartly today. Smart 200-point surge on the Nifty. The Sensex is also up somewhere around 700 points or thereabouts. Broader end of the markets, some bit of underperformance from the mid-cap index, Yatin, but small-cap index was up 1.5%. Banks also continue to underperform, Yatin, but today it was the IT pack that was leading the moves. 1.5% gain on the Nifty IT pack. Media pack was also shining. We tend to not speak about it, but the media index was also up almost 2% or thereabouts. Autos were also up. And you also had realty that was gaining. In terms of market breadth, it was fairly strong. Of course, you will shed more light on that. But India VIX cooled off more from here, 4% down, sub 13. So that is a comfort factor for the bulls as well. In terms of the individual movers on the Nifty, Titan, Macquarie has come out with a bullish report. They have reiterated their outperform call on the back of expected demand to pick up, so to say. So that stock was shining bright. Infosys, M&M, Grasim, JSW Steel, these were the other movers. On the flip side, defense stocks have been taking a breather, right? Last 2-3 days. Today, Nifty Defense Index was also down for a second or third day. BEL, top Nifty laggard. Even private banking names like Kotak Bank and Axis Bank, they were among the laggards. iShares bucking the trend when it comes to auto names, and ONGC was the other one. As crude cools off, we see ONGC also coming under pressure. But Yatin, also HDFC Bank in focus, because HDFC Bank's NBFC arm, HDB Financial, it's 12,500 crore rupee IPO open today. Of course, 700 to 740, that's the IPO price band. But LIC, allocated 6.5% via the anchor book. That's something that Moneycontrol had first reported that LIC was looking to participate, or that has happened. And if you look at the IPO subscription, a little slow, but it's just the first day. So let's see how things go. 0.3 times rather subscription on day one thus far, around till about 3:30 or so. But Yatin, broader end of the markets, quite a few high flyers. I want to talk about KNR Construction.
Yeah, KNR
Shot
Construction.
up.
Yes, that stock has shot up, and no sectoral losers today. Advanced decline ratio looking healthy at almost 4:2, rather 4:1. If you look at the mid-cap, small-cap index, good gains coming in there. Today we had stocks like Kirloskar Brothers, Samman Capital, KNR Construction moving up in trade. In fact, if you look at KNR Construction, the recent order book was about 5,000 crores, and today they won orders worth nearly 5,000 crores. So that is a coal mining project. The tenure of the project is nearly 5 years, and 74% kind of holding would remain with KNR in this joint venture. So yes, a large order, and the company's market capitalization is a petty 6,000 crores. So I think this is one stock which moved on this order. GRSC continues to lose. That stock is another 6% down. If you look at the 52-week high, which it hit few days back, from 3,500 odd levels, it has come down to 3,000 levels. So a 500 rupees correction in this stock. Mazagon Dock also witnessing correction, almost 600 rupees down from the recent high. So yes, Nandita, defense stocks continue to get hammered, and brutal profit taking coming in for the past 2 or 3 trading sessions here.
That's true, right? Because the Middle East tensions are also de-escalating, so to say. Nothing really happened in the last 18-19 hours. So that's one reason perhaps that defense stocks are coming under a bout of profit taking. But global cues are also fairly strong. Just before we move on to stocks, I want to say that US futures are mixed, but largely trading with positive bias. European markets had come off. I think they were mixed, but last night Wall Street saw a good session. Let's see how things pan out. Although Fed chairperson has said that they are in no hurry to cut rates, right? Despite Trump's pressure, they've maintained the fact that we'll see how the ultimate tariff rates impact inflation, and only then they will go ahead and cut rates. So that's the word coming in from Jerome Powell. Today, of course, he will be testifying in front of the Senate Banking Committee. So that's another thing to watch out for. But in terms of stocks to keep on your radar, the ones that we have on our radar this afternoon, Indian Hotels, JP Morgan feels perhaps it's time to check in, right? They have an overweight rating. They have initiated coverage and target price is at 890 rupees, which is implying a 16.5% upside. They have said that the recent underperformance that we have seen in the stock prices is basically temporary, and it is expected to reverse going forward. And they have listed out 3 factors that could be driving a reversal in underperformance for Indian hotels. They are expecting better than expected revenue per available room in FY26, and they are also expecting potential upward revision in consensus EPS estimates that saw cuts when the geopolitical tensions with Pakistan were playing out.
Yes.
Of course, after Operation Sindoor, but that is expected to reverse according to JP Morgan, and they are also expecting first quarter performance to be fairly strong on a low base and encouraging demand trends when it comes to available rooms. FY30 targets, that's most important. They expect FY30 target of the company to be met before or earlier than planned. Now, in terms of FY30 target, Indian Hotels was aiming to double its hotel portfolio as well as consolidated revenues by FY30. So that was their target, and they are expecting the company to meet that target before the stipulated time. The revenue is expected, the company in fact is aiming to double its revenues to 15,000 crore rupees and expand its hotel portfolio to 700 by FY30, and of course it's a part of the Accelerate 2030 strategy, which also includes a significant focus on driving top line growth through traditional and newer businesses as well. But in terms of the JP Morgan report, then they are expecting return on capital employed to return to the 19% trajectory by FY28, supported by a rising share of capital light business and a significant jump in managed hotels, hotel keys rather. But capital light, in terms of capital light business, the company is aiming to achieve 75% in that sense, and JP Morgan is expecting of course that to happen as well. Revenue is expected to grow in mid-teens, compounded annual growth rate between FY25 to FY28, and EBITDA margins are also expected to expand by another 100 basis points to over 36% by FY28. Recently, Jefferies had also maintained its buy rating on the stock. Analysts had maintained their long-term targets on the stock, but the stock is down 10% on a year-to-date basis. But going by what JP Morgan has said, there is room for reversal here on, and of course the report does suggest that the company is poised or perched on a strong trajectory.
Yes, and I think Indian Hotels, what a phenomenal run that stock has given ever since the lows it made in COVID. There were several rounds of fund infusion, one QIP, one rights issue, if I remember correctly, and stupendous returns for the investors. But clearly today the stock in focus was MCX as well, Nadida. Yeah. That stock moved nearly 7% intraday, and we have UBS, which has upgraded the stock of MCX. Not only that, they've increased the target price from a level of 7,000 to a new level of 10,000. So a 5-digit target price for the stock, which means that from the current market price, UBS still believes that could be a 40% kind of a upside. Now, if you look at the key driver here, the commodity prices have turned volatile in the past few quarters. And because of heightened volatility, the exchange turnover has moved significantly. In fact, improved pace and visibility of new product launches also will contribute the profits for MCX moving forward, according to UBS. They believe that the Q1 ADV, which is the average delivery volume, has risen by nearly 50% sequentially. And for options, the premium segment, the volumes are up nearly 30% QOQ. So yes, volumes have been improving. Expectation that numbers also will be strong, and that 10,000 target price sent the stock to levels past 8,000 intraday.
That's true. I think MCX has been consistently hitting 52-week highs ever since I think it got the approval from SEBI on launching electricity derivatives, right? Of course, the stock has gained somewhere around 35% in the last 1 month itself. So yes, flying high, MCX hitting a fresh record high as well. The other stock that was buzzing and how was the share of IndiaMART Intermesh. Stock was up 6%. It's a very bullish brokerage report from Nuvama, wherein they have upgraded the stock to buy from reduce, and the target price has been hiked by a whopping 80%. From 2,100 to 3,800 rupees, which is why I think the stock was buzzing 6 to 7% higher. But this upgrade comes after earlier downgrades, 2 earlier downgrades. One was in October 2023 when the stock was downgraded to hold, Back in 2024 October, again the stock was downgraded to reduce. But now, of course, they have upgraded the stock because they believe that valuations will re-rate going forward due to improving growth trajectory. Now, the management has done a lot of platform enhancements. They have increased their investment in marketing and branding, and these steps are expected to drive a rise in unique business inquiries, and that in turn will result in an uptick in net new subscriber additions as well. Now, they are expecting subscriber additions to begin improving from the second quarter itself, second or third quarter, leading to a revival in collection growth as well. The management is also on track to reduce competition within suppliers, where they are bringing down supplier inquiries from 7 to under 4, and they are also making efforts to attract more buyers. Now, the business, according to Nuvama, is entering a new demand upcycle. They believe that headwinds have bottomed out, and they have hiked their FY26 and FY27 earnings estimate by 9 to 10%. If you look at the revenue growth, that has been strong despite lower profitability, and that is something that will continue to drive earnings growth for the company. And the target valuation multiple has been upped from 22 times to 35 times, which is why we are seeing such a sharp hike in target price as well. Now, improving traffic, higher business inquiries, rising net subscriber additions, these are some of the factors that are expected to drive collections here on and also accelerate revenue growth going forward. Margins are also likely to normalize to around mid-30 levels, according to Nuvama. So, all in all, a very, very bullish report coming in, an 80% uptick in the target price. Yes, boding well, and looks like the stock or the company is on a strong growth trajectory here on.
Absolutely, and IndiaMART Intermesh, after this Nuvama report, clearly one of the top F&O gainers in trade today.
Well, those were all the stocks on our radar this afternoon. Tomorrow is a crucial day. We have a monthly expiry, and if all goes well, and if nothing comes out of Iran, Israel, and if Trump doesn't tweet something untoward, then hopefully we will close the June series above 25,200, and that's when we can see higher levels as well. But with that, we are timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and I'll see you tomorrow morning. Thank you.